Welcome all subscribers to the Hard Right Edge video trader training tool that helps you to become a better trader or investor. Every week the Hard Right Edge is produced and brought to you by the Inside Market Analysis bi-weekly webinar. First and foremostly, I want to thank all the new subscribers from the Traders World Online Expo for joining us. We appreciate the opportunity to present to you, and we look forward to everything that we can accomplish in the rest of the year in front of us. Today's demonstration is on the advanced decline oscillator and how, when you learn the correct interpretation of this simple indicator, it can help you, markedly help you, to determine future directional price movement in your favor, to be at the right place at the right time. If we look at the relative comparison of this indicator, this single graphical line, this graphical representation of everything that is advancing versus declining, in this case, the relative comparison between it and the Dow Jones Industrial Average. In this case, we can clearly see that even though we didn't have an official negative divergence from this price point as compared to here, this indicator level compared to this indicator level did verify that there was a lot of negativity within this price chart pattern, possibly leading to a sell-off. Simple trend line drawn from this baseline level to this secondary data point within the indicator itself proved a chart pattern that was traded out of to the downside. A good technician at this point would draw a trend line from this baseline level to the secondary point right here and broadcast that out into the future. Again, another confirmation that the price movement to the downside is imminent. So let's go fast forward here to the most recent price activity, and this is what I really want to demonstrate today, because we've been waiting for this moment to arrive for more than 12 trading days. Everyone who studies here has been waiting for this to happen, and we knew it was imminent. And because of the advanced decline oscillator clearly showing us that there was so much negativity within this chart pattern, these small range days that have been trading up on the Dow for such a long period of time, that this weakness would provide an eventual move to the downside, which was actually started back here with a pivot point high that was established within this area right here. I'll blow it up so you can see it a little better. Now, if we take a look at the relative comparison between the indicator level from this point on 120 forward to approximately here at 221, and we draw a trend line to lay out that negative divergence from here to here, it's very clear to see the disparity between the slope of this trend line to the upside and this one to the downside. What else has happened after that? A secondary negative divergence within the advanced decline oscillator itself from here to here as compared to the final area high within the Dow itself, aligning within these 2 days from 228 to 229. Now, anytime we're in a situation like this, what we want to do as better traders or investors is understand clearly that there's a lot of weakness within this market. And it wouldn't matter whether we apply this advanced decline oscillator to E-mini futures, which I do to trade every day, or any sector or any market that has the ability to be able to apply this indicator and use it to gain actionable intelligence to trade off of. What else could you do as a good technician to confirm the move? Simple trend lines from below to above. This baseline level here, as compared to this level broadcast out into the future, provides one pattern break to the downside. Here, a secondary trend line drawn from the baseline level to the next through provided a second break. And so on as we fan out these trend lines into these peaks underneath right here, a third breakout. And what's happened just most recently? For those of you that may have gotten out late or got in short a little bit late, right here. So we have one indicator confirmation in the form of a negative divergence that's compared to the prices running up on inflated highs. 2, your secondary negative divergence. 3, 4, 5, 6 confirmations out of a single indicator. And this is the way to trade as a professional. To extract as much intelligence out of a single indicator is humanly possible to determine future directional price movement. This is Jeff Kilian for the Hard Right Edge. Thank you everyone again for joining us anew from the Traders World Online Expo. For more information about the services we provide, simply log on to theinsidetechnician.com, go to the Services tab, and it's all there for you. Thank you.